Hello, traders. It's 8:01 a.m. Chicago time on Wednesday, the 22nd of July, 2020. Thanks for poking your head in here, taking a look around. Today's episode is number 1802. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. If you're new here, this what's in front of you is basically a very short bio. If you have questions, you can pop them into the chat box. I'll be happy to answer those after the broadcast. We get about 2-3 minutes after we end the broadcast to chit chat. Um, this morning, it looks like we are. Sorry, my throat. It looks like we're on a risk-off sentiment, although the Nasdaq remains positive versus yesterday. Remember, the Nasdaq was weakest yesterday. The techs, and I'll show you that in a bit, were just dragging ass yesterday, down 1.68% by the end of the day from the open, from the Wall Street open, and really preventing the S&P from holding that gap. The Nasdaq's up 22 points, right now 20.75 points or 0.2%. The euro is higher today, trading at 116.07, up 0.54% in the futures. Gold is crossing the $1,850, trading at up $7.30. Gold's just really piping up here, as was expected and had been talked about by the smarter or more respected global macro guys out there like Jeff Snyder and Jim Bianco and others. The bonds are up 20 ticks. Again, allocation to safety this morning. The Bund is up 44 ticks and the 10-year Treasury notes up 4.5 ticks. What is dragging today? Crude oil is dragging behind. Crude, although having popped higher, is down 48 cents, trading at 41.44 in a September contract, down 1.15%. The Euro Stoxx 50 down 28 points or 0.82%. The Russell's down 0.6. The DAX down 0.4. And the Dow is down 40 points or 0.15, and the S&P is down 3 points. The S&P is just below its settlement price and about 5 points below its closing price. So that's where we stand here today, coming into today. Market's a little exhausted. We've had a pretty strong run up, and it's only natural for it to pull back. And where did it pull back to? It's pulling back towards the 32.28. Do you remember 32.28 from last Thursday? Or is it Friday? A really important area. And that's basically the low of the session in Globex. The low in the S&P has been 32.27 pretty strong delta move right off of the European Open. Right off of the European Open. What is going on with my newsfeed? There we go. Voila. As the Europeans came in, they just kind of smashed the market a little bit and dropped us into a sell-off. And so that's where that stands. There's a lot of geopolitical stuff going on, but then again, it has been, since 2016, 2017, we've had a lot of geopolitical stuff. Some stuff going on with the consulate in Houston. The consulate is being evicted on short notice, and they were observed burning papers, and China says it'll take a stand. I don't know what the story is there. I'm not going to speculate on it, but the fact is, it just seems like there's a continuous campaign of unsettling relations with China. There's obviously a strong purpose for that. There's still a big question on whether or not the U.S. will pass a COVID stimulus again, whether or not it'll include a payroll tax break. The Senate, the GOP Senate is against it, but the president's pushing for that. So the market may anticipate something there. Fewer taxes, more money to spend, so on and so forth. A bigger deficit, and that'll show up in the bond markets, in the treasury markets. So anyway, so that's where we stand in terms of what's on the calendar. I'm actually going to shorten this segment quite a bit, make the overview of the market, the macro picture, and the overview a lot shorter. Everybody has access to a calendar, and you can all look. But the key figures today, there aren't any high impact numbers coming out. We do get existing home sales in the U.S. at 10 Eastern. And then, of course, if you're trading energies, we get the inventories. API came out yesterday, and this morning or today we get the full inventory numbers from the EIA. So pay attention to that. Other than that, there's not much there. Let's take a quick look at what was expected yesterday versus what we got. The main expectation. Now, remember, this right here is RTH. This is Globex, okay? So Globex. So this is all Globex. RTH, we opened above range, and we were in a gap. And the expectation is that we would fill at least portion of that range, about the mid of the range at 32, 55, 54, and then rally up. Did not happen at all. That did not take place at all. The secondary scenario is an attempt higher, push into the prior days or the overnight sessions point of control, and then roll over and then push down towards yesterday's range. Push down towards yesterday's range, and then rally as well. The third scenario, which is basically what we got, is push up to the overnight point of control and then eventually get an impulse down, which took forever, and then push into the prior day's range, which is right here, the prior day's high, push into the prior day's range and towards that 32.46 closing price from Monday before coming back up. This is the third scenario is the closest to what had happened, but I got to be honest with you, from a practical perspective, I believe that it was really difficult to trade that scenario because all day long, and let me start with this. This is just, shield your eyes. It's a bright image compared to my other charts, but this is my underlying sectors. These sectors here, there's 7 of them. There are 7 of them. There used to be 6, 5 main plus transports. It's a habit. I've always followed transports or included transports. I believe transports are the lifeblood of the economy. These include FedEx, UPS, the railways, all that stuff. But because we split the communication services out of the techs, I added the comm services. So now there's 7. These sectors here represent approximately 74% of the S&P 500, if not greater. I have not checked that number in probably 3 months, but they're the majority of what's going on. And I have this chart up. I've had this chart forever. To give me an idea of what's leading, what's lagging. And this blue line right here, yellow on white, not such a great combo, huh? Let's go to black. This line right here, the blue, is XLK, representing the tech sector. And what's missing, actually, and needs to be changed in color is this guy right here. And let's make it, actually, for some reason, it's not loaded. Huh, interesting. Yeah, it's not loaded, the comm services. So the techs were just a massive drag, closed down 1.68% from the open, Everything starts at the opening price at 9:30 Eastern, with financials leading. And so we had a large divergence between financials, industrials. So if you look at the S&P, you look at the Dow, you'll notice that those stocks, those indices held up pretty well on the gap. But the Nasdaq tumbled immediately on the open and kept driving down. The S&P kept responding by selling off just a bit down into the 56, 55, which I I took I traded it as a buy in those areas. I could see from the order flow that there was a big battle down there and a lot of absorption, and those were decent trades. The opportunity there was decent. From buy the 57 half, 56, 58, and look for 65, 65, 75, 66, back and forth. Yesterday was a big, in my opinion, a scalping day opportunity until it let go on the close. And even when it let go on the close or later in the session, the financials wouldn't give that up, and the industrials had a hard time pushing down. And it's important to understand the underlying sectors and understand the formulation of your index while you're trading it. So here's what actually happened yesterday. We opened up in a gap. This is an RTH only chart versus my other charts, which are full session. We had a nice opening swing, a clear opening swing, 64 quarter down to 58 and a quarter. We break the opening swing higher. I'd love to do a play-by-play here, but we'll run out of time. We break the opening swing higher. Where does it go? It goes right to the overnight point of control. Again, that's what was expected on both scenario 1 and 3, right? So we go, that number, as you can see in front of you there, 67.75. We push to 68.75, and then that's pretty much the high of the day. We break through on an impulse. We pull back right to mid, just a nice little setup there. We pull back right to mid. The mid is these blue boxes. And then we extend the IB by a tick, and we have what is called a classic failed auction. It took the IB by one tick, found buyers, and we have an impulse up. And it looks like the S&P is just fighting the NASDAQ sell-off. At this point, the NASDAQ is actually selling off, consolidating, was well within the prior day's range. And the S&P just will not give it up, would not give it up. And so there's quite a bit of dissonance between the NASDAQ and the S&P, which have a very high correlation. I'm not advocating for trading across or inter-commodity in an inter-commodity way. It's not wise to trade the NASDAQ off the S&P or the S&P off the NASDAQ, although you can use it as a lean. A lot of times the spread, if I charted the spread for you, you'll see that it breaks down quite often. Not so much so between the Dow and the S&P. That's a very well correlated um, uh, pair. But with the NASDAQ, it oftentimes runs away. And of course, with the Russell, it really is random. And then the S&P finally gives it up in the last hour, moves back into the range. So we get scenario 3 here, moves back into the range and touches or clips the target at 46 and a quarter, the closing price. Again, this is what it looked like. The idea is it would push down into this orange line. That's what's intended here. On scenario 3, the cyan color, that's this orange line, and it finally tags it, pulls back to the IB low, reaches down lower, which I didn't expect, and it finally tries to rally, just like I outline here, that we finish with a rally on the close. So scenario 3 played out, but from a did you trade it? Is it easy to trade? We can theorize all we want. It was definitely not an easy one to jump on, in my opinion, because sellers, as the delta stayed negative here throughout the session, sellers did not get rewarded very much yesterday trying to sell the breaks or the continuations. until later in the session, which is generally when traders give up. They try one, two, three times and then have to stop, and then it kind of follows through, which causes you to want to change your rules. Don't change your rules, of course. In terms of what we've got for for order flow, looking at CT Bookmap here, we open up and we take this positive bias. We collide with 3264, some liquidity sitting there. That liquidity came back afterwards and has remained there. That's the prior point of control. And then we sell off. And then when the Europeans come in, you could see the sell off here was very feverish. The delta was very high on the negative side. Somebody was really hammering the bid here, and we collided with the liquidity block that's between 35 and 31, and stalled out at the all-important 32.28. Very important stock zone there, outlined here. This has been here since last week. And then we take a bounce, and now we have liquidity at 51. We're stuck in the 50 region. Not much more to glean out of this. The order flow coming into the market. We do still have pretty decent offers in the gap zone mid at 32, 30, 72, 73, and 75. We could not get there. There's a gap zone here from the 24th of February when COVID was first impacting the market. That's the biggest sell-off day that started us off on the correction there, the big drop. The midpoint of that is 32, 72, 25. You can see liquidity at 72 and 75 above, and then liquidity at 32.25 below, and then below that at 32.15. So just bear that in mind. What have we done in the overnight session as we wrap up the review here and jump right into what's expected for today? Here's what it's done overnight. We've had 299,000 contracts so far. Okay volume. We've tested the prior point of control, and the prior point of control, which happened to be on top of the opening price of yesterday, and we've sold off, and we have remained ahead of VWAP, the full session mid, until just now, and now with all that has collapsed together. The full session mid, VWAP, and the overnight point of control are on top of each other, telling us the market has reached balance. So what it has done is it has tested this big and, again, very important zone down here at 32.28, this stock zone, and has found buyers, a pretty decent taper at the low, and is balanced so far. And so to me, this looks like the market has been stabilizing, and it's stabilizing right in the center. Again, VWAP mid, and the point of control on top of each other, the hallmarks of balance. And then from here, so when we reach balance, we need some sort of, the market generally waits for some sort of impetus or igniter to get it to move in one direction or another. We are inside of the prior day's range, out of value. Yesterday's value is valid. Okay, yesterday's value is valid, and as I wrote yesterday in the head trader channel at Convergent Trading, I wrote that the 55 area is very important. I said 55 to 57 are an important reference for today's session. Right here, you need to watch this, in my opinion, the 55 to 57, a trip back up. And if it's not able to take the 55, 57, I believe, and this is not a trade recommendation, I believe the area between 55 and 57 presents an excellent short opportunity. You figure out your time frame, but an excellent short opportunity on a virgin test based on today's session. That is the first play there. So let's take a look at what's expected for today. Again, if you have not checked out EdgeClear, I would really be tickled if you'd give it a shot. Also, if you trade with a group of 5 traders, including yourself or more, reach out to us for an edge pool. We can set up a custom edge pool and custom pricing for you and your group that we believe cannot be beat by anyone else. And you can pull your volume together to reach lower pricing. It's the prop pricing model. So here we are. We're on top of the point of control. I'm expecting an open auction that responds back, that responds towards the 50 and potentially pushes into, we close the internal gap, the closing gap 52, pushes into that 54, 55 area. Or 55, 57 area, and then I'm looking for an impulse down there. I'm looking for a response initially, back into the open, consolidate, and then I'm looking for it to start to push back into the prior day's range. And the target really is the prior point of control. The prior point of control, which is sitting a little bit higher here at in the 63, 64 area. That's scenario one. Scenario one is responsive higher. We've done some selling already, and we've clearly found some buyers below. If that doesn't work out, I'm looking for an open auction that pushes towards the 50, 52 area and then gets an impulse down. Same thing, consolidates here at the 42 and then starts to work itself back towards that 28 area for an initial bounce. In that scenario, we have a pretty decent range. We would have a range of 53 or so, 52 half to 28, and that's what I'm looking for on the secondary. So in other words, if it fails to take out that 52 and again 55, 57 area, a decent scale in area, in my opinion, with a predefined risk, then we are likely to roll over and start pushing towards back towards the open to take risk off. And if it continues through the open, a runner we may want to hold that runner all the way down to 28, 29, hopefully. These are the two key scenarios today. Note that the delta is negative, where in price the overnight inventory is balanced, but in delta the overnight inventory is negative, is short. So I'm expecting a pop on the open. If you're paying to price in terms of inventory for paying to price alone, I think you're only getting half the picture. And yesterday we did continue to squeeze the delta lower throughout the session. So I'm looking for those people to get paid and then for that to balance out. So that's what I'm looking for. It's late. Sorry, these things keep going long. It's a lot that is being talked about here, but here we are. I'd like you to take a moment to just find the subscribe button on YouTube and hit subscribe. Add yourself. By subscribe, it's free, totally free. By subscribing, you will get an automatic notification whenever I send an invite for a Trader Bite. You don't have to go fishing for it. And if I upload any videos, I plan to put up some trade wisdom and other videos that may benefit traders. So it's ft71.com/lowercase YouTube and hit subscribe. Good luck, and I'll catch you tomorrow morning. Take care.